Welcome to the Kryptonator 1337 podcast. Here is my second episode. Welcome. I'm happy that you tuned in for my second podcast episode. And in this one, I will look a bit into the technology behind Bitcoin first and talk about sidechains before we get to a, for the most people, I guess, more interesting topic. And that's the question, how high can Bitcoin potentially go? And in this context, what is a hyperinflation? So I hope you enjoy it. I hope you can learn a thing or two and have fun. So to start with the Bitcoin sidechains or sidechains in general, a small introduction. So when we talk about blockchains, there are different categories, like blockchain 1.0, 2.0, 3.0, and so on. 1.0 blockchain is practically Bitcoin, the Bitcoin blockchain, as it was the first practical application of this technology, where every transaction or overall every change of the network is written down into it, was one of the main features of the immutability, which means that transactions are encrypted and can't be changed afterwards by any entity. But of course, like it is always in technology, blockchain 1.0 is not the end. And a lot of people compare it tech-wise to the internet of the 90s. So what we saw after Bitcoin is the blockchain 2.0, and as it's the most or the best known candidate for it, I will talk about Ethereum here. What Ethereum achieved and what wasn't possible on the Bitcoin blockchain before is that you can create all kinds of decentralized applications, so-called dApps, on it. And over the last year, we saw, especially when it comes to decentralized finance applications, a huge run. I don't want to talk about the problems several DeFi applications faced, especially security issues. There's a lot of work to do, but basically this is the way to go when we want to build something new. And the second use case for Ethereum, of course, was to run shady ICOs, where you sell worthless tokens to some dumbasses. But that's another story, right? So to conclude, when we compare a blockchain 1.0 like Bitcoin is with blockchain 2.0 like Ethereum, the main difference is that you have the ability to create smart contracts and decentralized applications on the blockchain. Which leads us to the question, how can the Bitcoin blockchain can be improved to get there? So let's start with the first point. What is a sidechain? So a lot of people heard about it, but I'm not sure what it is exactly. They think there would be another coin when you or a wholly separated coin when you maintain a sidechain. So we will dig into the question, what is it? So it can be basically explained pretty quickly. Just imagine the Bitcoin blockchain as a highway. And on this highway, there are the most vehicles driving most of the time. Yeah. But right and left of the highway, there are some country roads. In this analogy, so-called sidechains. And those sidechains can be bidirectional connected to the highway, so the main blockchain, as it's needed. And this combination of a main blockchain and a sidechain, or even multiple sidechains, enables many new applications, just like DeFi, and increases the overall functionality of the network. When we look at the Bitcoin ecosystem, those bidirectional connections of different chains enables, for example, the exchange of assets between the main blockchain and the sidechain. For example, by using Bitcoin as the underlying asset for a separate blockchain. And to use the sidechain, a user must send the Bitcoin to a specific output address where the coins are locked. And yeah, so the user cannot use it again. It's frozen, so to say. And after a waiting period, the corresponding amount of coins is released on the sidechain, and the user can transfer his coins on the sidechain. And of course, the reverse is similar. If a user sends Bitcoin from the sidechain to the main blockchain, the funds are also sent to an output address and then locked. After the waiting time is over, which is always fixed in advance, the coins can be transmitted to the main blockchain again. So how does it work in concrete? Sidechain includes so-called federations. Yeah, a federation is a group of servers that acts as an intermediary between the main blockchain and the sidechain. And it basically decides when the user's coins are locked and when they are released again. Those members of the federations are always chosen by the developers. Yeah, that's it. Federation members are chosen by the developers. So there's not another system or anything else. When it comes to security questions, most of the time those are the first questions. Yeah, what about the security of a sidechain? And in general, it's like sidechains can act fully independently of the main blockchain. And if there are security problems with the sidechain, those problems can be isolated, can be controlled, and will not burden the main blockchain at any time. Likewise, security of the main blockchain does not affect the sidechain or the sidechains. So what are the basic advantages and maybe disadvantages of sidechains? So when it comes to the advantages, the first one is that a sidechain is permanently accessible to everyone. So once it's created and correctly maintained, it is very persistent and allows long-term interaction with the main blockchain. The second advantage is the possibility to interact with other blockchains. This can be in the form of a Bitcoin sidechain, which allows transactions to be more effective, or as a compatibility of the virtual machine of one sidechain with the virtual machine of a completely different blockchain. For example, the Bitcoin sidechain RVM with the Ethereum virtual machine. Sidechains can thus also be used for extensive testing of software updates and indirectly ensuring the further technological development of the main blockchain. So, as nearly every time in life, when something has advantages, of course there are disadvantages as well. And when it comes to sidechains, one disadvantage is that to ensure the safety on the sidechains, you are required miners. And this basically pushes up the costs you have if you want to create and maintain the sidechain. And another disadvantage of sidechains is the requirement of second layer, and this layer could be in theory a potential weak point for attackers. So, of course, there are, I don't know how much blockchain environments working on scalability and whatever, working on sidechains, interoperability. But I will focus on Bitcoin here, of course. As we all know, Bitcoin will remain king. And maybe not in terms of a blockchain 2.0 or running DeFi like on the level as it is on Ethereum. But there are important developments which are worth to talk about. I picked Bitcoin Rootstock, short RSK. And RSK is an open source platform for smart contracts that can be connected to the Bitcoin blockchain. And it acts basically as a sidechain. The project aims to increase the functionality of the Bitcoin network by enabling near instant transactions and through this a higher scalability, which could fill up the gap between Bitcoin and other more advanced blockchain projects like Ethereum. So yeah, sure that you know it. So until now, it was not possible to apply smart contracts in the Bitcoin ecosystem or directly on the Bitcoin blockchain. But now there is a DVM, it's called Deterministic Virtual Machine, which can be compared to Ethereum's virtual machine, and it is compatible with it. RSK should be able to scale up to 100 transactions per second without losing its decentralization. This is not a huge step when you compare it to other features of traditional payment services or other blockchain projects out there. But small step is still a step, right? So, and this sidechain could be the main component in the future when it comes to allowing users or developers to build decentralized applications in the Bitcoin ecosystem. And it does not require own coins or something. So there's a coin called Smart Bitcoin, short SBTC, but it is directly linked to the Bitcoin market price. So in conclusion, there are some exciting developments. It's for sure worth keep an eye on it. Nothing in the space is set in stone, and I'm happy to see Bitcoin evolving over the next years. And we'll continue to look after the RSK developments. So, but enough with the technology. I guess most of you are here to hear some crazy BTC price predictions, right? No, so over the last days, I realized how dangerous it is to get sucked into those short-term price predictions. I didn't see that we will reach 10K. I thought we will see the dump we saw last night earlier, but here we are, right? Doesn't matter. I don't want to talk about the potential Bitcoin price over the next weeks or months, not even in 1 or 2 years, but take some time to look at real mind-baffling thought experiments out there, and just running some basic calculations. So it is more important for long-term investors rather than for traders, and it's kind of an endgame scenario, when the US dollar won't be worth anything. What is Bitcoin doing then? So let's start with some crazy thoughts about the Bitcoin price. And one of the best known predictions was done by Hal Finney in the year 2009. And I will just read an excerpt of his quote. As an amusing thought experiment, imagine that Bitcoin is successful and becomes the dominant payment system in use throughout the world. Then the total value of the currency should be equal to the total value of all the wealth in the world. Current estimates of total worldwide household wealth that I have found range from 100 trillion to 300 trillion. With 20 million coins, that gives each coin a value of about 10 million US dollars. At first I was wondering why he wrote 20 million coins, but I think that he just subtracted the 1 million BTC from Satoshi, which could maybe be Hal Finney himself. Yeah, we don't know. And important is this assumption. So he assumed that the worldwide total household wealth is between 100 and 300 trillion US dollars, which leads him to a Bitcoin price of 10 million per coin. But of course, the world's economy has grown since the post was made. And according to the Global Wealth Report 2019 by Credit Suisse, the total worldwide household wealth today is more like approximately 360 trillion. So a lot more than Hal Finney took into account, or as it was back then. And if we divide those 360 trillion US dollars through 21 million Bitcoins, we get a price of roughly 17 million per Bitcoin. Yeah, that's it. 70 million US dollars per Bitcoin when we calculate with those numbers. Of course, this thought experiment is pretty crazy, and it basically depends on one thing, and this is the so-called hyper-Bitcoinization. And this is the idea of the whole world running on Bitcoin, basically as a world reserve currency, which is a huge assumption, of course. But yeah, so it's a thought experiment. This will probably never happen, but people thought that probably Bitcoin will never reach a price of $10 or $100. If you talk to somebody like 2012 and would have told him, yeah, Bitcoin will reach $10K a day, he would have called the ambulance, right? So there are some problems when we think this further. So if all the money in the world runs on Bitcoin, it would be number one target for every hacker on this planet. And to protect it, there would have to be countless more miners protecting the network, which would take an even bigger toll on the environment. With fewer mining rewards, Bitcoin halving approximately every 4 years, the transaction fees would skyrocket to the moon and beyond. And what is missing in this scenario to work out is the fact that not everybody on the world has internet access. So while this thought experiment is maybe a bit off, it shows you the ultimate forecast for a world which runs through hyper-Bitcoinization. But let's get a bit more realistic and compare Bitcoin to other asset classes. So while Bitcoin is still very young, started 2009, so a little bit more than 10 years, other asset classes are here for hundreds or even thousands of years, right? What we will compare is the market cap of Bitcoin, which is right now around 120 billion US dollars, with the market cap of other asset classes. So what we are looking at, the most anticipated comparison between Bitcoin is the one with the asset gold. Greetings to Peter Schiff at this point, you suck. And currently gold sits at the market cap of around 9 trillion USD. When we add the market cap of silver, which is 1 trillion USD, we end up with roughly 10 trillion USD market cap of the two biggest capitalized precious metals. So if we divide those 10 trillion through 21 million BTC, we come to 480,000 USD per Bitcoin. If we just take 10%, so 1 trillion on 21 million Bitcoin, we end up with a Bitcoin price of 48,000 USD. And those are just gold and silver. Yeah. But look further. We have the stock markets, and I guess there are not a lot of people on the world who have a clue how big the stock markets really are. And to show you how big they really are, I just looked for the market caps of the five biggest exchanges, like the New York Stock Exchange, Nasdaq, etc. The data is added in the description of this episode. Those 5 biggest stock markets have a combined market cap of roughly 50 trillion USD. 50 trillion. So if we divide 50 trillion through 21 million BTC, we end up with a price of 2.4 million USD. And again, if we just calculate with 10% of it, we divide 5 trillion through 21 million BTC and end up with a price of 240k USD. And keep in mind, all those numbers I'm calculating are not taking into account that there are, what was the number? I guess something around 2.5 or 3 million Bitcoin, which are already missing. So where nobody has access to it anymore. So in fact, it would be even higher. But I just calculated with 21 million. So everybody knows where the number is coming from. So those are insane comparisons, and it really shows you how small the Bitcoin and cryptocurrency space overall still is. If you are in the space for longer than 3 years, then you could think that this current growth of the space and the surge of the Bitcoin price is something pretty insane. And yes, it is, but still we are just at 120 billion USD market cap. Yeah, look for the market capitalization of Apple or Google / Alphabet. This market is so tiny and we are still so early. I'm bullish as fuck, guys. I'm bullish. Well, whatever happens, on the long run, Bitcoin will have a market cap of several $1 trillion. Period. The monetary policies of central banks worldwide are telling you everything you need to know. They can create money out of thin air, pumping the economy with it. It is not sustainable. No fiat currency will ever survive. The only question is, what will a US dollar be worth when a Bitcoin is worth 6 or 7 digit US dollar amounts? This leads me to my last topic for this episode. And this topic is basically the question, what is a hyperinflation? So as you know, the economy is not running so well during the COVID measures worldwide. Who follows me on Twitter knows my opinion to it. This is a Bitcoin podcast, not a political podcast, so I will avoid any critics on political decisions worldwide. But as a matter of fact, we can see that central banks are basically pulling out their trillion bazookas and just flooding the markets with money created out of thin air. So it's important to face a potential hyperinflation over the next years. And as a lot of people don't know what it is, I decided to get a bit into it. So a hyperinflation in general describes a rapid and out of control increase of general prices in an economy, usually more than 50% per month. While it is a rare event, it has occurred several times in different countries. So I'm from Germany, and in the early 20s of the last century, in the Weimar Republic, we saw months where there was an inflation of 30,000%. 30,000% inflation per month. Yeah, for comparison, typically the US inflation rate, for example, is below 2% per year. Yeah, below 2% per year, measured by the consumer price index, which is basically including a basket of goods and services. Hyperinflation means that consumers and companies need more money to buy products because of those higher prices. And as normally it is measured in monthly price increases, as I already told you. However, hyperinflation is measured in terms of exponential daily increases. So when you have an inflation of 5%, not a year, not a month, not a week, but a day, you know that the roof is on fire. So what are the consequences of a hyperinflation, you might ask? Well, at first, a lot of people will hoard perishable goods like food because prices are rising, with the consequence that there will be food shortages, followed by excessively rising prices, a devaluation of the currency of nations, purchasing power is decreasing. People may no longer be able to deposit their money. Leading banks and lenders can go out of business. Tax revenues, talking about the state side now, tax revenues can also fall if consumers and businesses cannot pay, which leads again to governments not providing basic service. And you see where this is going. So hyperinflation is not fun. And talk to older people, talk to your grand or great grandparents, what they can tell you about this, and to see how fucked up a situation like this would be for the whole economy. So in the past, hyperinflation has occurred during periods of severe economic turbulence and depression. While a depression is a longer period of a shrinking economy, which means a negative growth rate. A recession is typically a period of negative growth that lasts for more than 2 quarters or 6 months. And this is what we are facing right now. So we are already in a depression, in my opinion. And through the COVID measures, the risk of a recession is increasing day by day, basically. And yeah, so depression can last for years, but it can also be characterized by extremely high unemployment, corporate bankruptcies, reduced credit availability. So while the central banks are working on the third issue, they can do nothing about the growing unemployment. Over the last weeks, over 20 million new unemployed people in the US alone. And yeah, so what I said, they can work on the third issue, the reduced credit availability, by flooding the markets with fresh money. And yeah, so this is what the Federal Reserve is doing right now. However, if the increase in the money supply is not supported by economic growth, as measured by the gross domestic product, GDP, the result can, or depending on a few other factors, will lead to a hyperinflation. And this is the point where you have to think about reasons to trust the fiat system. There's no reason to think the current system will survive on the long term. And with the system, I mean the fiat system. So there was no fiat currency in history which was sustainable, which survived, because the failure is implemented in the design of the system. It cannot work. It cannot work. So, what's the best hedge against a potential economic meltdown? Right, buy Bitcoin, ladies and gentlemen. Buy Bitcoin. That's it. That's the most important thing to do when it comes to your finances over the next 1 or 2 decades. That said, I hope you had fun, learned a thing or two, and got even more bullish on Bitcoin, right? So, see you on the next episode, and have a nice Sunday.
When it comes to this lending, we're not going to run out of ammunition. That doesn't happen. We set the interest rates in time at what we think is the right, giving the economy the right level of support. If we'd raised interest rates more, it would have been higher than we thought, and economic growth would have been a little bit slower, so it wouldn't have mattered in the end.